Welcome to the Forex Regulators Who's Watching Who video version of the blog located on our website in the General Forex section. Sit back, stay a while, and enjoy the show. The Watchers, a look into trading oversight. Let's talk about who watches the market through the lens of a referee. Back in the early days of online trading, before the 2008 financial crisis, the spot currency market was akin to the Wild West. Brokers from all over the world lured traders with obscene levels of leverage, or gearing. It was not uncommon to have access to 1,000 to 1 or even higher leverage, meaning that you could control $1,000 of currency for a single dollar, or a full $100,000 lot for a measly $100 of margin. The draw was that each pip movement up or down translated into $10, so a short 20 pip move could net or lose a couple of $100. Get on the wrong side of a trade without deep pockets or smart money management, your available margin could vaporize down to zero in a matter of minutes, or even seconds, depending on the size of your position and the volatility of the market. Risk was generally an afterthought, since that actually indicates self-control and limiting unnecessary and/or dangerous levels of exposure. So the question begs to ask, who is watching all of this insanity? Nobody really. There were regulatory agencies tasked to monitor the financial markets. However, they usually focused on securities such as stock, futures, options, and commodities, not so much with the spot currency market. I personally have had more than one bad experience with brokers who flew under the radar of regulatory oversight, which ended quite tragically, i.e., bye-bye money. Those war stories will probably be told in another blog. In fact, I'm sure of it. So, what constitutes bad behavior? There were brokers who manipulated price on their platform by something called stop hunting or facilitating price spikes, while others engaged in nefarious and brazen act of disappearing with client funds never to be heard from again. In actuality, this amounts to nothing less than outright theft. I didn't take it lying down and sought assistance from various regulatory and law enforcement agencies, both domestic and international, including the FBI, but nothing ever became of it. A hard lesson indeed. That being said, I wanted to shed some light on the commonly known and universally accepted groups who keep those in the spot currency market on the up and up. I'll read through these quickly in the interest of time, but please feel free to look them up yourself with a quick internet search if you'd like more information. In the United States, the National Futures Association, the NFA, and the Commodities Futures Trading Commission, CFTC. In the United Kingdom, the Financial Conduct Authority, FCA, and the European Securities and Markets Authority, or ESMA. Australia has the Australian Securities and Investment Commission, or ASIC, and in Japan, the Financial Services Agency, or the FSA. Other agencies do exist, which monitor their specific regions as noted for Canada, the Cayman Islands, Hong Kong, Singapore, Switzerland, and Cyprus, to name a few. So the question remains, why do brokers choose to be bound by strict regulations imposed by seemingly draconian rules? The answer is actually pretty simple. The main purpose of any reputable broker obtaining certification under one or more of these Forex regulatory agencies is to determine that they are in fact governed by a higher authority and conduct themselves with an elevated degree of fiduciary morality, integrity, and above all, honesty. This is good for us. In fact, it's awesome because you, as a small retail trader, have these huge bodyguards behind you, watching all the activity and ensuring that you get a fair shake at claiming a small piece of the market for yourself. Or, at least if you take a loss, it wasn't due to broker misbehavior. The bottom line is, trade with a broker who lives in a house with reputable Forex regulatory oversight. Check out our broker suggestions on our website. We've already done the research for you. For additional resources, blogs, and other great Forex-related material, please visit the Stonehill Forex website for more information, and don't forget to sign up for our email notification on the contact page. We're glad you found our channel. If you're not subscribed yet, be sure to click on the subscribe button to receive information on the latest videos. Of course, come see us at www.stonehillforex.com and explore our website. We're also on Facebook, so be sure to like us to get notified of new posts. Discover a world of Forex information all in one place. Our only goal is to make you a profitable trader.
Any information communicated by Stonehill Forex Limited is solely for educational purposes. The information contained within the courses and on the website neither constitutes investment advice nor a general recommendation on investments. It is not intended to be and should not be interpreted as investment advice or a general recommendation on investment. Any person who places trades, orders or makes other types of trades and investments etc. is responsible for their own investment decisions and does so at their own risk. It is recommended that any person taking investment decisions consults with an independent financial advisor. Stonehill Forex Limited training courses and blogs are for educational purposes only, not a financial advisory service, and does not give financial advice or make general recommendations on investment.